I'm Phoebe Batterson-Brown, and this is the weekly Volatility Roundup from CMC Connect. The yen proved to be an outlier in terms of price action for currency markets last week. Expectations have been mounting that the Bank of Japan is nearing a pivot in terms of its monetary policy, and with the final meeting of 2023 looming, the question is whether this assembly will hold further clues. The idea that any definitive action will be seen at this point appears to be diminishing, but with commentators looking for Japanese rates to rise around the same time as the US benchmark borrowing costs have the potential to start falling next year, this could remain an active trade. 1 week vol on dollar-yen stood at 13.3%, against 7.34% for 3 months. Sugar prices sold off by more than 10% last week, amidst upbeat harvest news out of Brazil, along with a reported surge in Ukrainian exports to the EU. That was sufficient to drive the underlying down below 23 cents per pound, making for the lowest level seen since June. Some bargain hunting has been in evidence, but with an apparent surplus, at least for now, extending any rally could prove challenging. 1 week volatility on the US raw contract printed 70.9%, against 40.18% for 3 months. As for equities, it was multinational miner Anglo American that proved to be one of the most active stocks following a significant downward revision in its outlook. On Friday, the share price suffered its biggest one-day loss since the financial crisis, selling off by 14% as investors assessed implications of the news, which could well translate into less generous returns. 1 week vol came in at 118.64%, against 55.15% for 3 months. And it has been a volatile week for gold prices, with that move out to all-time highs being followed by a degree of downside pressure. Better than expected US economic data has been contributing here, propping up the US dollar as a result. That has been sufficient to drive 1 week vol on gold out to 21.79%, against 12.57% over 3 months.